Hello, this is Steve Malone with Compass FX. Hope you're doing well today and you get some good trades. Well, the Fed meeting minutes today coming out. Their stance again remains dovish, as many in the marketplace have been expecting a potential lean towards raising interest rates sooner than later. But given Fed President Dudley's comments, given some other comments that lead to more of a dovish lean in the market, well, we see a very strong push today on the pound dollar and on some of the commodity-based pairs. I want to briefly go over those and just simply take a look at applying the dots indicator. I've had some folks again ask me, how does it perform during news announcements, especially very volatile news announcements? Well, let's just take a look at what happened today. Again, just remind you that the dots indicator is based upon price action and if the market is expanding or contracting. Now, we've seen as of late the pound's made a pretty strong move lower. If we step out and you can look at, let's say, the 4-hour chart, we've seen this big move to the downside. And today, after the market had come up, bounced around a little bit, we're starting to see a bit of recovery due to the FOMC meeting. So if I step back in and take a closer inspection of this, you can see today what took place from the open of the Australian session, moved down, gave us a sell entry level, and moved down to the sell target number 1 level. Market pushed back up, tested the open of the day, rolled back over, and gave us a sell entry back down to the sell target number 1 before the FOMC meeting. When the FOMC announcement came out, boom, there we go, to the upside. And if you'd been sitting simply with a buy entry order, a pending order at the buy entry level with a target either at buy target number 1 or buy target number 2, you could have made a great day today just by following the dots indicator. Take a look at the Kiwi dollar. Now, we've heard from Prime Minister John Key and from Governor Wheeler of the RBNZ that they prefer a weaker Kiwi dollar. But as I've often said in folks in my trade room, that you can talk the talk, but eventually you got to walk the walk. We haven't seen anything from the central bank as to a potential drop in the Kiwi interest rates. So therefore, with the market in the position that the dollar is going to continue to be dovish, we get this strong boost back up in the Kiwi. Now granted, the Kiwi, if you go out and take a look at that 4-hour chart, we can see that that Kiwi has been on a landslide down and has bottomed down. We were up here around this 81 area and the market's dropped down and has been bouncing around here trying to make a range, and we do have kind of a double bottom. And if you look on that 30-minute chart, we have a double bottom today. So again today, from the open of the session at the start of the Asian session, a little up and down action, market pushed down from the sell entry down to the sell target number 1. Nice little trade there. Market pushes up, gives another opportunity, and actually pins right back at the sell target number 1 before launching on the FOMC meeting minutes. And again, had a pending order there on the buy side, potential targets either target 1 or target 2, a nice trade. Now when we take a look at the dollar CAD, it did give us some up and down, some potential back and forth today. Could have been stopped down on a couple of moves when the market moved down and went back up. Could have stopped you out there, did it again. Could have stopped you out as the market moved and pushed up to the buy target number 1. In every situation, you're not going to have a winning one. A couple of things you could have done is to put on the guppy multiple moving averages, and that would have possibly kept you out of these trades because we're really into a level of consolidation here. Then during the FOMC meeting, we get a little push back up and then this strong drop down. Again, if you had a pending order during the FOMC announcement, this drop down, you could have possibly have taken some in that. And last but not least, we had the Aussie. Now the Aussie made some strong movement down given the weaker than expected bias overall coming out of the RBA. With this FOMC being dovish on the dollar, again another big move to the upside today. But we see from the start of the day that it did drop down to a level, came back up, tested the open. That's something I want to emphasize if you have the dots, is to look at the market trading away from the open of the day. That's often a situation that leads to better trades when you're trading away from the open. So we had an opportunity to trade away from the open, comes back up, gives you another opportunity, but when it comes all the way to the open here, and comes back over. That's a good trade setup. Today we got a big strong push with the FOMC across the buy entry level and almost reached up there to the buy target number 2. Now again, if you're interested in the dots indicator, simply go over to www.compassfx.com/dots and you can learn more about the dots indicator. As well, if you'd like to join me in the dots trade room, send an email to support@compassfx.com. We got a great group of traders today. It was a great day in the room. Even though the market was a bit choppy during the first part of the U.S. session, we were picking off trades left and right using the dots and using some additional techniques along with the dots, like using the guppies. Well, this is Dean Malone with Compass FX. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.